Hey everyone, welcome back to the channel. Today, we're going to talk about something super important, starting a savings account in 2024. Trust me, it's a game changer when it comes to securing your financial future. Now, let's dive right in. Opening a savings account this year is a smart move that can set you up for success down the road. It's all about making your money work for you and being prepared for whatever life throws your way. So, why do people put off opening a savings account? Well, it's easy to get caught up in day-to-day expenses and think, I'll do it later. But the truth is, not having a savings account can have serious consequences. You're missing out on the opportunity to grow your money and protect yourself in times of need. In today's fast-paced world, it's more important than ever to start thinking about your financial future. One of the best ways to secure your financial stability is by starting a savings account. By setting aside a portion of your income regularly, you can build up a nest egg that will provide you with a safety net in case of emergencies, help you achieve your financial goals, and even allow you to retire comfortably. But with so many options available, it can be overwhelming to know where to start. That's why we've put together this easy guide to help you open a savings account in 2024. If you've been thinking about starting a savings account but don't know where to begin, you're in the right place. In this easy guide, we'll walk you through everything you need to know to start a savings account in 2024. Let's get started. Why start a savings account? Before we dive into the steps, let's quickly cover why having a savings account is crucial. Financial security. It provides a safety net for unexpected expenses. Goal achievement. Helps you save for big purchases, like a car or vacation. Financial discipline encourages good saving habits and financial planning. Step-by-step guide to starting a savings account. 1. Determine your savings goals. Why this matters. Knowing your goals will help you choose the right type of savings account and stay motivated. How to set savings goals. Emergency fund. Aim for 3 to 6 months worth of living expenses. Specific purchases. Set a target amount and time frame for things like a new car or home. Long-term savings. Consider retirement or college funds. 2. Choose the right bank. Why this matters. Not all banks are created equal. Finding the right one can save you money and provide better service. What to look for. Interest rates. Higher rates mean your money grows faster. Fees. Look for accounts with no or low fees. Accessibility. Consider online banking, ATMs, and branch locations. Customer service. Read reviews and ask friends or family for recommendations. 3. Compare different types of savings accounts. Why this matters. Different accounts offer various benefits, so choose one that aligns with your goals. Types of savings accounts. Traditional savings account. Great for easy access and low minimum balances. High-yield savings account. Offers higher interest rates, typically found online. Money market account. Combines features of savings and checking accounts with higher interest rates. Certificate of deposit, CD, locks in your money for a set period with a fixed interest rate. 4. Gather required documents. Why this matters. Having the necessary documents ready will streamline the account opening process. What you'll need: identification, government-issued ID, driver's license, passport, etc. Social security number for identity verification. Proof of address, utility bill, lease agreement, etc. Initial deposit. Amount varies by bank and account type. 5. Open the account. Why this matters. This is the actual step where you establish your savings account. How to open an account. In person, visit the bank branch with your documents and initial deposit. Online, visit the bank's website, fill out the application, and transfer your initial deposit. 6. Set up automatic transfers. Why this matters. Automatic transfers make saving money effortless and consistent. How to set up. Choose amount and frequency. Decide how much money you want to transfer and how often. Weekly, bi-weekly, monthly. Link accounts. Connect your checking account to your savings account for seamless transfers. Set up through bank. Use your bank's website or app to schedule automatic transfers. 7. Monitor your savings. Why this matters. Regularly checking your account helps you stay on track and catch any errors. How to monitor online banking. Check your account balance and transactions through your bank's website or app. Monthly statements. Review your bank statements for any discrepancies. Set alerts. Many banks offer alert services to notify you of transactions or low balances. Maximize your savings. Why this matters. Boosting your savings rate can significantly impact your financial goals. How to maximize. Increase contributions. Gradually increase the amount you save each month. Cut expenses. Identify and reduce unnecessary expenses to free up more money for saving. Reinvest interest. Add any earned interest back into your savings. There are different types of savings account, and some common types include traditional savings accounts, high-yield savings accounts, money market accounts, and certificates of deposit CDs. Traditional savings accounts are a simple and straightforward option that allows you to deposit money and earn interest on your balance. High-yield savings accounts typically offer higher interest rates than traditional savings accounts, making them a good option if you want to maximize your earnings. Money market accounts are similar to savings accounts, but often come with higher minimum balance requirements and may offer check-writing privileges. CDs are a type of savings account that requires you to deposit a certain amount of money for a fixed period of time, during which you earn a guaranteed interest rate. Once you've chosen the type of savings account that's right for you, the next step is to find a bank or credit union that offers competitive interest rates and low fees. It's a good idea to shop around and compare rates from different financial institutions to ensure you're getting the best deal. When you've found a bank or credit union that meets your needs, the next step is to gather the necessary documents to open your account. This typically includes a form of identification, such as a driver's license or passport, as well as your social security number. Once you have all the necessary documents, you can visit the bank or credit union in person or open an account online. After your account is open, it's important to set up automatic transfers to ensure you're consistently saving money. By automating your savings, you can make sure you're consistently setting aside a portion of your income without having to think about it. It's also a good idea to regularly review your savings account to track your progress towards your financial goals. By monitoring your account balance and interest earnings, you can make adjustments as needed to stay on track. In addition to setting up a savings account, it's important to establish an emergency fund to cover unexpected expenses. Financial experts recommend saving 3 to 6 months' worth of living expenses in an emergency fund to protect yourself in case of job loss, medical emergencies, or other unforeseen circumstances. Whether you're saving for a big purchase, building an emergency fund, or planning for retirement, a savings account is a valuable tool to help you achieve your financial goals. So don't wait any longer. Start saving today and secure your financial future for tomorrow. And finally, I encourage you to kickstart your savings journey by opening an account. Share your experiences in the comments below, and don't forget to subscribe for more financial tips. Thanks for watching, and I'll see you in the next video.